Guys, just watch my strategy play out to the core, guys. I mean, this is the most simple London breakout strategy that you will ever find across the internet. And watch the beginning of the video to the end of the video. You will understand where I started this whole setup and you will see it playing out, all right? Hello guys, this is your boy Sbac here, and in this video I'm going to show you how to trade the London Open Session in a very simplistic manner that guys will help you to make a very ton of money. I'm not just playing, I'm going to show you and you will practically see the strategy play out to the core. Get yourself some cappuccino and relax, all right? Because it's a semi set and forget and a fully set and forget. So there's a lot in this video for you. There are some rules of engagement in this strategy. Now, the rules of engagement are there is a time frame that we have to respect. We are trading the London session, opening session. So we want to get into the market the same time, more or less around the hour that the London market opens, which is at 8-9. We will do it at 8:30. At 8:30, we set up everything and we are ready to get into the market. If you come 8:30, you are good. Then the pairs involved. The pairs involved are GBP USD and Euro USD because we are trading the European CET, Central European Time. You need to get this in your mind, okay? The other thing you have to know is that we want a pre-consolidation market before this time, okay? So the time that we will get into the market, we need the market to have been consolidated or show a form of consolidation, okay? Fourth thing is, if the market is trending prior before our time, that is called a no trading day. The fifth thing that I'll tell you is, which is involved in the rules, it is better if I show it to you on the monitor, okay? See, at the day of recording, okay, I'll show you the strategy playing out right at the day of recording, okay? So this is how the strategy is. We said we don't want the market to be trending. We need a form of consolidation. You see, here, it came here, came here, came here. You see, it's a form of consolidation. Around this time, we will enter at what time? At 8, okay? So 8:30, you see. Let's come here. See the market, 8:30. Okay, you see, it still hasn't moved that much. Okay, so we will put this here, right? We will put this here, and we will put this here. Okay, all right. So we will pick the lower low and the lower high. Okay, within our time frame. Okay, our time frame is 3:30 to 8:30. All right, you see it? Okay, so we pick the high. Okay, let me bring this down. We pick the high and the lower low. Okay, so here is it. And every time before we get into the market, we'll leave like 3 pips. Okay, after we've done this setup, okay, then we'll leave 3 pips. So you need to wake up, let's say 30 minutes before or 15 minutes before. Then we make this setup. Okay, then you see we have 3 pips. Okay, so 3 pips. This is where we will put our entry. Okay, for this example. Then we set a sell stop at this 3 pips area. Okay, so you set your lot size, okay, how much you want to risk. Okay, very, very important. You set your stop loss, how much you want to risk. Okay, now everything that I do, I like to prove to you that it works. And for you to know that this strategy is a very good one, if you have any query, you reach out to me on my Instagram page where I'm very, very active. There's a 5-year stick that you have to keep in consideration to determine a very strong and a good, formidable forex trading strategy. These rules are, it has to have an entry, it has to have an exit, it has to have a winning logic, and it has to have a risk management factor attached to it, and the rest is stickability, meaning after you see that it has these rules of engagement, stick with it. Don't say, I tried yesterday, I lost money, so I'm not doing it anymore. Let me move on to another strategy. We don't do that. Okay, you never make money in that way. Guys, another thing that you have to put in mind is, which is very, very important, is in this strategy, our risk to reward is 1-to-1. The 5-year stick that I talked to you guys, I'll prove to you in the strategy. Okay, let me start with the winning logic. The winning logic behind this opening strategy is that, you know, when they open the morning market like that, people have come fresh in the market, they've come into the office, the energy is tight. You see, they're about to move the market, they're about to shake the market. That is why we want to take advantage of it, because we also said that we want a pre-consolidation phase. Okay, meaning that the market has been silent all this time. So when the market opens, there is a likelihood that it has to break out. Okay, because now people are in the market and they are active. okay? When the market is not silent, that means the Japanese, the Asiatic session move the market. So in that case, we don't trade. We want the market to be a little bit consolidated, all right? Up, down, before our time, okay? So I hope you got the winning logic behind the strategy, okay? That is what we are taking advantage of. When they open the session, then we jump in. So this is the entry, and this, we are going for this amount of pip, all right? So whatever thing that was consolidated here, that is what we are going for as profit, okay? So this will be from here to here is how many pips, guys? 19 pips, all right? So we say that from here to here, we will count 3 pips, all right? You got it? Good. Then you already know that we are late in the market, right? But I'm just showing it to you for illustrational purposes, okay? Sorry, I even did a wrong thing. This is not supposed to be buy stop. It's supposed to be sell limit. When you are doing it, we came in late, all right? When you are doing it, guys, here is supposed to be a sell stop, all right? And up here will be a buy stop, okay? Now follow me. I will explain everything to the core. Now we are going for 2019 pips. Okay, so you open your stop loss and here you open your take profit. If you understand this strategy, guys, you will make a ton of money because it's very, very simple and it works because it's based on human reaction. You understand me? So we are going for 19 pips. Look at how much is left for the market to hit our take profit. You see, this is how much we are going for. This is how much we are risking. You see, 19. You guys see it, 190 points. Okay, making 19 pips. And here is it. We drag our take profit down here, 190. You see, 190. You see, so by now we should have been out. Do you see the strategy playing out? Good. I'm trading right on the live market and the strategy is just playing out, okay? Don't be so happy because what I want you to understand is I don't want you to be emotionally attached to whatever thing you are seeing because at the end of the day in trading, there's nothing as such as holy grail, all right? It works, but just like every strategy, you will incur losses, okay? So today it is going on well for us, okay? We are almost there, but there are times that even though we have everything on point, we will still lose, okay? But the strategy is so perfected to the core because of the human reaction and some factors, some technical factors that we've put in place, which is the consolidation, the breakouts that we've put in place. And these are things that are trusting and have proven themselves to be working in the market. That is why it makes it possible to make this strategy an efficient strategy. Okay, so this is, we entered into the market here. All right, so let's say if we wake up around this time, okay, in this time frame, okay, let's say around 6 and we wait till 8:30. Okay, so when it's 8:30, then we draw this, we get this setup. You draw this, you draw this, you draw the up, you draw the low, then you calculate your 3 pips. Okay, so we would have entered into the market here. Okay, guess what? When we placed our sell stop here, then the market reversed, came here, triggered our entry and went back. You see, went back, and guess what? It came down all the way, dropped drastically down, almost hit our take profit, then it reversed back again. It took us back to 0. You see, so what you do is, or what I like to do is, when I set it up, it's a set and forget for me, all right? But it's a semi, I need to make this clear, all right? It's a semi set and forget, okay? Which we will get there. Bear with me and you will get everything, okay? So it reversed and now it's going down, okay? This is the first part, okay? The next part will be that, guys, after you've set this part, okay? You've set your entry, you've set your take profit, you've set your stop loss. Now for the stop loss is always 2 pips, okay? 2 pips, you see? I didn't calculate it, but I got it. All right, so it's approximately 2 pips from this line. Then you will do the same setup you did here, because remember, at this time that you are doing the setup, this one hasn't been triggered. Now, we don't know where this is part of the winning logic as well, okay? Because when there is a consolidation, market has to break out either to the top or to the down. Most of the times, we don't know. We want to take advantage of the direction in which the market moves. So we are kind of like saying, take me with the flow. So it's that type of thing we're doing here, okay? We replicate this same operation here back to the buy direction. So if here was sell stop, all right? At the time when you are doing it, you will have a sell stop, not sell limit, all right? Watch this one. This one will come out well. So I will count 3 pips from here to here, okay? 3 pips, okay? Good. Then I put the buy stop, okay? They should have the same lot size, okay? When none of your position is triggered, the two of them should have the same lot size because none of the two has been triggered. There's something about that. So exercise patience and watch it carefully, all right? And watch it carefully. Okay, then as we said, you bring it to 2 pips, okay? You bring it to 2 pips. It should be approximately around here, yeah. It's okay, you'll do it. I mean, not to get the video long, I won't spend much time on it like that. Okay, so 19 pips, okay? We need to have 19 pips here too, okay? Good, 19 pips, good. So we are there, all right? 19 pips, okay? Good. Now, as I told you, if we are watching the market from this peripheral, okay? Let me get the triangle. If we are watching the market from this point, okay? Because from this point, this is the time that we started with our setup, okay? And we made this one. At the time we are setting up this position, the market hasn't triggered this one yet. So the same lot size we use here is going to be the same lot size we will use up here. Okay. Now, the moment we do this 2 setup, we leave it. We don't do anything. All right. We leave the market and we let the market play and do whatever thing it has to do. Okay. Sometimes it can remain consolidated in here for hours till the New York session, and you will see that it will break out with a huge volatility. All right. But watch something. We won't touch. As long as none of this position is being triggered, we won't do anything. The moment one of this position is triggered, guys, the moment one of this position is triggered. So in this perfect scenario, the moment this position was triggered, okay, now we come back here. Let me delete it because we have this position triggered, okay? So the market is going in the sell direction, okay? So the moment this position is triggered, we come here and we erase this position. You delete it, okay? And you double the lot size, okay? Remember, this is 0.01, so you will double it, all right? So if you are using 0.20, then you will use 0.40. Now we come here and we double the lot size, okay? Good. Then we do the same thing, same old position, all right? But the same 3 pips distance, okay? Guys, if you are understanding it, put a like and let me know that you are getting it, all right? Put a like, let me know. That's the only way I'm gonna know that y'all are getting it, all right? Some of you are watching and you'll be like, oh my God, hit the take profit, hit the take profit. Don't worry. If it doesn't hit the take profit, it's okay. Tomorrow is another day. All right. So guys, you have to be precise with this thing. All right, man, I'm so good. Okay. So let's bring the stop loss here. All right. Oh man. Stop loss, okay, all right. We have our stop loss here, more or less it's in the middle, okay. I'll explain the reason why, okay, and this is part of the winning logic, okay. Explain the reason why I'm doing this, okay. So 19, man, I'm getting it today, like I'm getting it like this, guys. Are you seeing? I'm putting the pips in the right place. All right, I'm putting the positions in the right place. Listen, now we double the lot size because peradventure the market reverses, okay. It doesn't hit our take profit and reverses and comes here and hits our stop loss and triggers this position and the market goes all the way into this direction. This is what we want to do. I mean, this is the reason why, here comes the reason why we increase our lot size. When the market hits our stop loss, now remember, we are out of this position, okay, and we have lost. Now, we double the lot size because we want to use one of the doubled position. In the doubled position, we want to use one to recover the lost and the other one to make a profit for the day. Remember that, guys, out of every breakout, out of every consolidation phase, the market either has to go up or has to go down, period. It doesn't have no direction, okay? So if it doesn't go down here, then it has to reverse and go up, period. Because the market has 3 directions. Or it consolidates, or it goes up, or it goes down, okay? So if it came all the way down here and it didn't go into our direction and it reverses up here, then that means it's bound to go up here and forever it goes. If it goes and it touch here, we've recovered our loss and we've made the money for the day and we are done. Now, this is the last setup you do. When you double this one, then it is officially a set and forget, all right? Because when the market in this stage right now, okay, in this state right now, you can now shut your computer and go and do whatever thing you gotta go and do, all right? And come back in the evening and come and check, okay? So this is officially a set and forget, okay, in the second phase. Why? Because when the market reverses and goes back here and hits hits my stop loss, I'm out of this position and I'm not even looking at it anymore. And when it triggers this one, now I'm looking into recovering the loss. You see how the game is? That's why we call it a set and forget. So peradventure, if it hits this one and it comes back again and it doesn't go all the way to the take profit and it comes and hits my stop loss, which it does happen in some rare cases, all right? It comes and hits my stop loss, then I'm done for the day, all right? But if it comes triggered this one and it takes me to my take profit, then I have recovered the loss and I have made one profit. You see how the game is? All right. So basically, this is the strategy. Okay, so guys, I like to put limits, all right, in this ranging area. To me, what I ideally do is when the ranging is about 30 pips, I don't trade that day, okay? Remember, we are talking about we need a consolidation before we can consider it as a valid trading opportunity, all right? If it is not consolidation, it's not valid for us. But if it is still consolidating, we need to put a measure. If it is above 30 pips, we are not trading. So if the market, the conditions in which we don't trade is when the market is trending before our time, we don't trade. And when it has consolidated, but the consolidation is above 30 pips, we are not trading. All right, get that, and get that. Okay, so guys, this is basically the strategy, and you are seeing it playing out nicely and interesting. All right, you're all waiting for the take profit to be hit. I mean, come on, check it out. We've almost gone to a lot, and you know, if technically we have to see it like the market will have to come around this area more or less. If it will go down, okay, it will come and retest this area. Why? Because this area, for those that don't know technical analysis, a little bit about this area is a demand zone. All right, so the market is supposed to come around this demand zone. All right, if it will come down. All right, now let's go and see this strategy showing itself proof in different areas. All right, so as I told you, you can do it on Euro USD, GBP USD, and EU. All right, Euro USD. Okay, so let's check. I will delete it. All right, now that you guys have understand the strategy, okay, everything you need to understand about the strategy is what I've explained here. Right, so you replicate this same setup every day. All right, now you do the same thing on Euro USD. All right, so when you set it up for GBP USD, then you do the same thing for Euro USD. All right, that is the setup for you guys. Okay, so Euro USD, here is it, 830. Okay, 830, it would have been here and here. 330, you see. So this would have been our distance in Euro USD. Okay, in Euro USD, it would have been here. Okay, 330. Yes, good. I got it right. So it would have been here, and because for the sake of time, guys, I'll try to go speed up a little bit. All right, and here. Okay, where's 830? Okay, so let's say 830. We are here. Okay. 830 on the market was here. Okay, now let's count it. How many pips is this? How many pips? 19 pips as well. Okay, so you do the same setup as I was explaining to you. All right, you know what, this one looks a little bit too much for me. I wouldn't go in because it's too wide for me, but this is just me having the eyes, okay, for the type of opportunity that I want. Because guys, as I told you, you always want it to be a little bit small. You don't want it to, you see, it was trending. You see, it was trending. All right, it got up here, and from here it trend all the way down here. Okay, so this is the time we got in. All right, so I wouldn't even consider this as a valid trade. All right, I wouldn't trade this one personally. I wouldn't trade this one. Okay, so let's get back and see some examples. All right, so see here. All right, 330. 330. All right, 330 to 830. All right, you see, so here, look at what will happen. Okay, so here, this is where we will sell, we will put our sell stop, okay, approximately around this area, 3 pips, all right, okay, 3 pips, okay, so watch something, we would have been, the sell stop would have been triggered, okay, and it will reverse and go back here and hit our stop loss, okay. Now, this example explains perfectly the reason why we put the other side of the trade. Look, so let me do the setup here and here, okay, so here, our entry would have been triggered. Okay, the moment the entry was triggered here, we will come here and double the lot size. Okay, and watch something. See, it will come back, hit our stop loss for this one, and it will hit the entry for this one. Okay, the buy stop that we will put here, it will hit it, activate it, and guess what? Take profit for the day. We've recovered the loss and make a profit. You see how the strategy plays out. All right, let's go back and look for more. So I tell you, it works on Euro GBP and GBP USD. Okay, because these two pair are in euro. All right, same thing here. All right, same thing here. You see, the market was consolidated. You see, so guess what? By the time we were ready to jump into the market at this time, 8:30, where is it? Okay, 8:30 ends on this candle. All right, so it would have been from here to here. All right, how many pips is that? It's 11 pips. All right, guess what? Take profit straight away. See how the market, how the market went down. You see, take profit straight away. See this one too. You can see it, right? You can see it. 3:30. Okay, so from here to 8:30, 8:30, 8:30. You see, bam, straight away to take profit. You see, we wouldn't in this position. We wouldn't even have the other position triggered, just like here, or just like it is on the GBP USD. All right. So you guys get a picture of this one because this is the setup, right? So guys, you can see the strategy working to the core. You see the same thing here. Take profit straight away. Same thing here. Take profit straight away. Here, the market, look, it trended a little bit. Honestly, this market, I wouldn't go into it because of the trend that came here. You see, it's just like what happened today. All right. So you want a real good consolidation, okay, before your entry time. You see something like this. You see, good consolidation. See, to here and market, bam. You see, we say that we put 3 pips. It was almost there, but it didn't touch it. Or if it did touch it, guess what, guys? You will recover straight up with this one. You see? So guys, that is the strategy playing out. And guys, trust me, if you can backtest it, and guys, if you do it well, you will make a lot of money. So guys, this is for you, the London breakout strategy simplified that you could ever find anywhere. All right, guys, if you tested and you're enjoying the strategy, guys, send it out to other people. If you did enjoy the video, the only way I'll know is you hit the like button. So guys, having said that, I'm gonna see you in the next video.